Repco Home Finance, case for a chat here, essentially being that the NHB has raised the refinancing limit to 30,000 crores for HFCs, which is housing finance companies, and they've hiked the refinancing limit to 30,000 from the earlier stated limit of 24,000. Yashpal Gupta, who's the COO of Repco Home Finance, joins in to discuss more. It's great to have you on the show. Thanks very much for taking out the time. Mr. Gupta, I wanted to understand from you, how much would this 6,000 crores hike in the refinancing limit move the needle for you?
No, first of all, thank you for having me on the show. Of course, the NHB hiking the refinance limit does help. At least it restores the confidence in the market. As far as we are concerned, we are quite comfortable on the liquidity position. Because almost 85% of our borrowings are long-term borrowings by way of term loans from banks, by way of NCDs, and by way of refinance from NHB. It's only about 15% which was short-term, and out of that 15% also about 7 to 8% is by way of working capital from the banks, though theoretically they get rolled over every year, so they are considered as short-term, but we all know that for all practical purposes they are long-term. So if you look at short-term market borrowings, for us, the outstanding CP limits are only about 450 crores. So that's not even 5% of our total borrowings. So we don't see much challenge to us on the liquidity front, but still NHB increasing the refinance will help us.
Is this refinance opportunity a breather, or do you think that the quantum of the refinance should have been higher, at least 40,000 crores, which is why I asked you my first question?
See, amount can always be increased, but if you see the second data that they have released is out of 24,000 crores, which was the earlier limit, which is now hiked to 30,000 crores, only about 8,500 crores has been disbursed so far. So still there is a huge undisbursed portion, and I am sure if requirement comes they will hike. But today, given the circumstances, I don't see that being inadequate. I think 30,000 crores is a good beginning, and if required, I am sure government will do. The issue is not, at least for housing finance companies like us, which are growing at around 15 to 18%, not at breakneck speed of 30-40%. It's the cost of funding which is important rather than the availability of funding. Availability of funding for us has not been a challenge. What is challenging is the cost of funding, and that is where NHB coming in will help.
Okay. Mr. Gupta, just wanted to understand for the benefit of our viewers, NHB lends under various schemes to HFCs. What is the typical tenure for NHB borrowing?
See, it is generally 10 years, but there are, as you rightly said, there are many schemes, but broadly we can classify them into two schemes. One is a subsidized scheme for rural housing finance, where our presence is not that much, which is a fixed rate loan given at a very highly subsidized rate. And second is, though it is a 10-year loan, but there is a reset at the end of 3 years. So from the point of liquidity, it is a 10-year loan, but from the point of repricing, it is repriced every 3 years. But if we compare that with the bank term loans, that we have, majority of our borrowings are by way of term loans from banks. So they are also 10 to 15 years repayment schedule, but they get repriced every year because they are linked to 1 year MCLR.
Okay. And just to get the record straight, what is the rate at which NHB lends on an average?
See, of course, I think they take into account the credit rating and the other risk profile of the HFCs. For us, the rate is about 8 to 8.5%.
Okay, having said that, I just want to get a quick sense from you on there being rumors that banks are not lending to NBFCs. Is there any truth to the same?
As far as we are concerned, there is no truth in that. And in fact, I'll just take 2 minutes to explain you about the liquidity situation of our company, because a lot of noises are going around that. See, in a housing finance company like us, the liquidity has to be calculated. One is a contractual manner, that is strictly as per the documentation that you have done, and second is the behavioral aspect. Now, if you look at because we have seen a number of research reports which have said that Repco Home Finance has a huge ALM mismatch. But that is on the contractual aspect, and I'll take just 1 minute to explain you the numbers. As on 31st March 2018, our 1 year liability maturing was 3,000 crores and our 1 year asset maturing was 700 crores only. So obviously there is a gap of 2,300 crores, and it does create a situation of uncertainty. But this is a contractual obligation. Now, if I'll tell you the behavioral aspect, there are two parts to this. One is that out of the 3,000 crores liabilities which are maturing, 900 crores were working capital, and they get renewed every year. They are already renewed in April. So those 900 crores are actually not repaid. But as per the contractual obligation, because if they don't get renewed, we have to show as a outflow. So that 900 crores is part of 2,300 crores, but actually it will not happen. So it comes down to 1,600 crores. Now, out of that, while our loan profile has a 15 to 20 years repayment schedule, but practically we are seeing that every year about 8 to 10% of our book, which means about 100 crores per month, gets prepaid, which of course is not taken in the contractual obligations in the cash flow, but actually that 100 crores per month we are getting back from the customers as a prepayment. So if we take that 1,200 crores into account, then our actual gap on a behavioral aspect is down to about 200-300 crores. So what I want to tell is that when we understand the business model of HFCs like ours, it is very important to understand the difference between the contractual obligations and the behavioral obligations. And as far as your question about do we see any pressure from the banks, so far we have not seen any pressure from the banks. In fact, in the end of the quarter of September, which just went by 10 days ago, there was some request from banks to utilize the limits before end of the quarter. So we have not seen any challenge at all from the bank side so far.
That's encouraging to hear. Let me ask you a more macro question then, Mr. Gupta, as we wrap up or perhaps draw towards a close. This is my final question at least. How do you see this crisis of confidence unfolding over the next 2 quarters of FY19? Do you think by the end of FY19, all the bad news with regards to what's impacted the NBFC space, whether it's on liquidity, whether it's on growth, whether it's on, tackling high borrowing costs, all of that would be rested? There would be perhaps a new chapter in the life of NBFC businesses?
See, the NBFCs or even the macro level, there are unfortunately many questions. For example, while the issue has arisen out of ILFS default, but at the same time, there is a knee-jerk reaction. And in this day and age when billions of dollars are at stake, these type of situations may arise. Now, while this particular phase we see will pass on by March, but we cannot rule out something new arising. For example, already we have seen in the previous 6 months the issues of the trade war between China and USA, the banning of oil from Iran, then the pressure on dollar. So unfortunately, the size of economy that we have and the way things are unfolding, we cannot rule out one shock after the other. As far as this particular issue is concerned about NBFCs, my take on this is, or our take on this is like this, that while we are presenting it as a liquidity issue, but it also has to be seen in the context of the business model of a particular NBFC. Like, though it is not appropriate to comment on other organizations, but still I'll take the example of ILFS just for the purpose of explaining that while they were using the short-term funds to fund the long-term projects, but those long-term projects were in the nature of infrastructure projects. which do not have only funding mismatches. They have other issues like uncertainty of completion, delay in payment by the various government agencies, or the income not being in line with the projections, or there is a delay in cash flow, shortfall in cash flow, etc. Whereas if you look at the simple HFC like us, which is not into builder financing at all, many HFCs are, there you have a risk of builders. For us, even though tenure is 15 to 20 years on paper, but we know that repayment will happen from the customer's personal income. It has nothing to do with the house income, that house that he is going to buy or purchase or construct. So there the risk of default is very, very less. So in this situation, even if there is some ALM mismatch, it does not affect the business model. Why I am telling all this is that I hope that when the regulatory agencies and the government agencies, when they try to find a solution, they do take these things also into account. They should not have a one-size-fits-all solution, and which may create unnecessary problems for the simple HFCs having simple business model like us.
All right, Mr. Gupta, we leave it at that. Thanks very much for taking out the time to speak with us this morning and clarifying a host of issues that are impacting the non-banking financial institutions.